GM everyone, let's first start with the trader spaces summary of DEX for the average trader, which we had with Mark and Ben from Clipper Exchange. Then we will be following the whole conversation which we had with them.
So we started out with asking about good ingredients for a solid DEX, and from Mark we got to know there are like two ingredients must-haves, which is first is good prices for traders, and second is to create profit for your LPs, which is liquidity providers. And also the fact that you need to have a revenue stream. Just giving out tokens doesn't work, so you need to have an aligned revenue model. Next up, we talked about what current project focus on, which is the vanity metrics like volume and TVL, but did they miss out on the community? And community is a very big thing. And we also got to know that liquidity is probably not such a good thing, especially if you are a small self trader. And Ben explained about the difference between Clipper Pool and Clipper Coves, and how coves enable you to swap between any swap pair. Then we learned about entanglement loss, and we learned about how the protocol remains healthy. There were two things. One is by taking the Oracle prices and making sure that prices are up to date. And second is, if it's a very real weird stuff, then just build a circuit breaker. And we also discussed about the financial statements of Clipper, so make sure to check it out on the pinned tweets. It's in the token terminal. And we also talked about how the governments would go decentralized in the future, and we hope that it's gonna be soon.
And okay, here is the rest of the trader spaces,
and
which I hope you enjoy and learn something new about decentralized exchanges.
Ben here. Let me just tell you the flow of conversation so that we have a structure in place and you will know what is going to happen next. At first, we'll start with introducing Clipper, introducing us, and then we'll have a brief Q&A session, and then we'll ask the community if they have any questions, and then we'll go with the closing notes. All right, I hope that's fine. We at Hashtag are building an under-collateralized lending solution through which you can get up to 3x loan on your collateral. And check out our pinned tweet. We have our mainnet waitlist registrations open. All right. So guys, we have Mark and Ben here introducing Clipper. So Clipper is a decentralized exchange custom designed to give traders the lowest per transaction costs, which includes fees, slippage, and gas on trades under $50K. We're excited to have you here, Mark and Ben.
Very excited to be here. Thanks for having us.
Right.
Yeah.
So
thanks so much for the opportunity.
Yeah. Thank you so much for accepting our invitation. So let's start with the first question, which is, can you please give us an introduction of you and your team?
Sure, I'll take that. So my name is Ben, aka Floss2S Daily. I am the head of community for a company called Shipyard Software, and I'm happy to be joined by Shipyard Software's CEO and co-founder, Mark Lurie. And what Shipyard Software does is we're a company that builds tailored, decentralized exchanges. Our mission is to provide free and fair markets for all people, leveling the playfield of global exchange for all users, because it's the world that we want to see. And we are fulfilling that mission. One of the ways in which we're fulfilling that mission is by creating a particular decentralized exchange called Clipper, which is what we're here to talk to you about today. And Clipper, as you said, is specifically designed with tailored architecture so that it grants the best prices for retail traders. Retail traders, actual humans, is our North Star. And we give them the best prices on all trades under $50,000. And I'm sure Mark can give you more details. And we probably go into more details later, but the other thing I'll say about Clipper is We've been around since Clipper's been around since July of 2021. Clipper is on Ethereum mainnet, Arbitrum, Polygon, Optimism. We expect to expand to other EVM chains. Our Discord has 100,000 active, engaged members, and you should join the community. You can find all the links at clipper.exchange. And we're so happy to talk about what Clipper does for the retail trader. Thanks again. And I'm sure Mark will hop in and add any details.
I think that was great. Thank you, Ben. And we're about 12 people full-time, spread mostly across North and South America. The more we can do to bring free and fair markets, the better. And I think that drove the desire to create a DEX focused on retail trades first, which is what most people are. And so to bring free and fair markets to everyone requires focusing on retail, not just whales, even though a lot of the dollar volume is in large whale trades.
Got it. I really like the enthusiastic introduction there, Ben. And thanks for filling it in, Mark. Since we're talking about a decentralized exchange, so my next question and the follow-up is, what are the ingredients of a good, solid DEX? Mark, for you.
That's a very good question, because I don't think it's clear today in the market. So the first ingredient is good prices for traders, which perhaps is obvious on the assets they want to trade. The second is you have to actually create profits for your liquidity providers. Because if you're not creating profits for your liquidity providers, then the system's not going to work. You can kind of fake it for a while by giving out tokens to liquidity providers, but after a while, that can't last forever. You have to be generating genuine profit. And then the last thing is you have to be generating some sort of revenue or profit for the protocol, because decisions have to be made and work often needs to be done in order to keep the protocol relevant. And so that needs to go to the DAO. And so you need to have a revenue stream there too. And so really you have a three-sided marketplace, really a two-sided marketplace with a DAO in the middle. And it's simple as that. Everyone has to be happy to be there organically. You can accelerate things with a token, but you can't solve things with a token. Now, one thing I'd say is that there's a lot that goes into that. I think the way that DEXs work today is not really accomplishing that. And I think that's for two reasons. One is the simplest formula that was used for the first DEXs is the CPMM is X times Y equals K. And that's just a money-losing formula. Now, it's a very simple formula, so the gas is cheap, which is why it was used. But it's a money-losing pricing formula. And so LPs just really don't make money. So that's a big problem with DEXs today. And the second is the fee model. Today, what happens is DAOs, let's say Sushi or Pancake or Trader Joe's, the DAO takes the protocol takes a percentage of every trade as its revenue. And so what happens when you have a protocol which gets paid for every trade? Well, they just want as much trade volume as possible. They don't care if that's profitable for LPs, right? And so what happens is they'll make bad trades. Like, it's easy to get trade volume if you're letting people put in 99 cents and giving them out 100 cents. And that's just a conflict of interest. And so I think to also have a DEX that works, you need to have an aligned revenue model. So the DAO just takes a percentage of gains that LPs have, not a percentage of trade volume or some other weird metric that doesn't align with the parties involved. Does that answer the question?
Yeah, sure. So, I really like the fact that, only giving out tokens doesn't work, because we've seen many projects out there that, especially, giving out tokens and making everyone just run behind them doesn't work unless and until you have a revenue stream. And right now in this market especially, it's very important to have a revenue stream.
Yes, I think that's right. I think more and more focus is being put on fundamentals. Token terminal's been at the leading edge of that, publishing fundamental data. The data is a little hard to get. And I think the worse crypto winter gets, the more people focus on crypto fundamentals, and I think that's a good thing.
Right. So let's move on to our next question, which is, so you've highlighted your target user base as quote unquote self-made traders. So can you elaborate on that a bit, Ben?
Sure, thanks so much. So really, we designed Clipper where retail traders are our North Star, and we designed the architecture about it. So self-made traders, really, what that means is retail traders. It also means human users. We actually want our users to come in and use our Clipper.exchange UI to use the product that way. So we have taken steps to eliminate bots. We actually want our users to be human and to be kind of regular folks. Retail is not subsidizing whales on Clipper. And that goes to the architecture of and the purpose of Shipyard Software, in that we're creating tailored exchanges, right? So Clipper is made for retail traders. We're not using vanity metrics of getting as large total value locked as possible, because in that case, yes, a lot of total value locked means a little bit less slippage, but slippage doesn't matter for the average trader making small trades. So what happened is that retail subsidizes whales. So these one-size-fit-all DEXs don't work for everyone. And recognizing that, we found that there's a value prop there. There's alpha, and that we can make tailored exchanges that work for specific markets. Perhaps Mark can add on to that.
I think that's a great summary. One reason self-made traders are great market to serve is because I think they're what drives the future of crypto, but also because they're not like arbitrageurs or whales who are just trying to skim a few bucks off a bunch of other people. They're people who are trading with their judgment to make money, not just trying to arbitrage other people. And that helps create a good market.
Awesome. Yeah, I mean, we don't see a lot of projects who are focusing on like maybe 99% of those users in the DeFi space.
Yeah, it's true. And I think part of the reason is because a lot of crypto has been focused on vanity metrics like volume and like TVL. And when you think about it, like if that's what projects are trying to create more of, because that's what the market demands, then they're not going to want to serve the self-made trader. They're going to want to do things that just result in volume and TVL. And that results in worse protocols, and it results in less focus on the people who matter most.
Guys, everyone who's here, make sure to check out Clipper's Discord. They have a very active community, and there's always something or the other going on in their community, which is why I really like Clipper's community. And let's jump on to the next question, which would be, since you guys have smaller liquidity pools on purpose, what's the threshold for that, and how does it make you stand out from the competition?
Well, the core insight here is twofold. One is liquidity isn't necessarily a good thing. People talk about TVL as like such a good thing, but it's not. If you're a whale, then you need a huge amount of TVL in order to have low slippage. But if you're a small trader, it doesn't matter if you're trading in a $10 million pool or a $1 billion pool. You're not going to get much slippage on a $1,000 trade. And yet you're paying fees to attract that $1 billion of TVL. And who does that help? Whales. And so that's a weird thing, right? Why is retail subsidizing whales? And so what we do is we cap the liquidity pool. So we don't let too much capital come in. And the result is we can drop fees for small traders. Now, that means slippage gets really big for large traders, but it doesn't really change much for small traders. And so the result is better prices for small traders. And so one thing we do. And it's not like it's a hard cap. It's just by having a smaller pool, you can afford to give better prices for smaller traders because your cost of capital is less. Okay, that's one thing. The other thing that we do to try to make this work is to have a pricing formula which is more profitable for LPs so that they can offer better prices to retail traders. Okay, the problem is, how do you have a more complex pricing formula without creating a lot of gas usage and expense? So what we said is, okay, let's take a more complicated formula, let's run it off chain, right, on servers to solve for the price. Okay, you have to do some root finding. It's a complicated formula. You have to solve for the price. Then the servers generate a quote which traders can take to the pool and allows them to trade. Okay, the pool then takes the quote and plugs that price into the formula to make sure it's equal, but it doesn't have to solve the formula for the price on chain. And that actually works. It keeps it non-custodial, and it prevents malicious activity from ourselves included. And it's very low gas because no solution has to be found on chain. It just has to be verified on chain. And we can use a much more complicated pricing formula. And so those are the two things that really allow us to provide the better prices to small traders.
Great. I really like the thinking behind this, and I'm assuming you all, like the whole team of 12, have a lot of experience of building and shipping such complex structure of softwares.
Yes, but one thing I'd say is a lot of it's about focus, right, and trade-offs, right? It's not, sometimes the best solutions aren't like necessarily big brain solutions. They're just like focus solutions, and you're like, okay, we're just focusing on retail traders. What do we now not care about? What design trade-offs can we make that others wouldn't make because they're trying to focus on volume, and we're just focusing on self-made traders? And then a lot of these decisions become clear, and that often drives a lot of differentiation. Sorry, Ben, I cut you off.
I love that answer from Mark because it's so forward-thinking and it's really process-oriented. And Mark, our CEO, is really a master of process. So, like it's exactly what he says. We, instead of looking for the value metrics, TVL and stuff, and trying to grab everything, we focus, and so we have depth instead of breadth, and we have mastery of that. However, my answer, while he was going for focus and design and process, I just can't resist an opportunity to brag because you're complimenting our team, and I wanted to hop in and say, yes, the team is incredibly talented. In fact, our CTO, who actually shies away from the spotlight a little bit, but he's legitimately one of the smartest people I've ever met, Abe Offman, and he actually, before crypto was even a thing, his PhD thesis back in, I can't remember, maybe it was 2012, he actually created he wrote a white paper that created the design for automated market makers, kind of before DeFi was a thing.
2008.
You can see in the 2008, thank you. So all of the white papers for some of the big DEXs, they cite Abe's work. So that's the guy at our team, the guy who invented automated market makers. So just let me take that opportunity to brag about the team.
Of course, that's a very big thing, because in 2008 itself, the crash happened and crypto, as in like Bitcoin, was just forming, but having an AMM already thought about in place is incredible. That just means how long-term vision your CTO is. All right, moving on to the next one. So when anyone goes to your website, right, they see the two words, which is Clipper pools and Clipper copes. So can you please make our audience understand the difference between the Clipper pools and Clipper copes?
Sure. So I can take that one. The Clipper core pools was the first product and feature that was launched with Clipper. And core pools are multi-asset liquidity pools composed of core assets. And generally, these are the blue chip assets. They're the ones that comprise 80% of all trade volume in DeFi. So for instance, on Polygon, it's going to be wrapped Bitcoin, wrapped ETH, stables like USDC, USDT, and DAI, and then also the native token of Matic. And the reason that we have these core assets and we have a multi-pool version of them is it's a good balance between like getting exposure to most of the volume, but without getting exposure to sort of the riskier assets. So it's a good mix of value versus risk. However, we did want Clipper to be a user's one-stop shop to DeFi, hashtag Uniswap killer. So we introduced about a year ago what's called Clipper Coves. And Clipper Coves is an ecosystem of liquidity pools, but instead of being the multi-asset pool of these core assets, these kind of 7 blue chips, it enables you to swap between any asset pair. So you give yourself exposure to, any long tail token within all of DeFi. So you want to trade Dogecoin 55, you're more than welcome to do it. But what's genius about the architecture is that obviously every pool requires a balance, right? So you have your long tail token as one half of the balance, and the other half of that balance is the Clipper LP, the liquidity provider token, which is really just a share of the core pool. So when you put liquidity into a cove, you then gain access to the core pool. You gain exposure to the long tail token that you're choosing at that point, but you have no exposure to everyone else's risky token. So once again, we have a great balance between exposure to the assets that you want, but with a little bit more safety as well. Mark can fill in detail. I'm sure if I missed anything important. Of course, as always.
I think that's great. And I think it's another example of how different situations demand different designs and have different technical trade-offs. And so I think that sometimes comes at the cost of complexity. But, if anytime you're trading in a one-size-fits-all solution, Uniswap's a great example of this. You should know that you're not necessarily getting the best experience or execution or price because it's one-size-fits-all. And if it weren't one-size-fits-all, and if we're making different trade-offs for different users or assets, it's probably, something which is focused is probably going to give you better results as long as it's focused on you. Obviously, if you're a retail, if you're a self-made trader and you're trading in a exchange built for whales, it's not going to be best for you. But so I just encourage people to seek out these designs and DEXs which are built for them and take into account the different trade-offs instead of ignoring them.
Right. I'm pretty sure with our, spaces that people are actually informed that, they observe themselves what kind of a trader they are. If they are, let's say, a retail trader, if they're a self-made trader, if they are whales maybe, and what kind of, how much amount do they trade in, so that, they can find a DEX which is actually suitable for their trades. And I'm pretty sure that is something eye-opening. And those of you who, trade under 50K, there's Clipper for you.
Yeah, and if that's not you, then there's other places that are great that you should absolutely go to, right? I mean, everyone should find the place that's best for them, and then DEXs should compete for you.
Oh yeah. Let's move on to the next question, which is on the subject of impermanent loss. So could you please explain to our audience what is impermanent loss and how is your approach towards it for mitigating the impact of it?
Impermanent loss is just loss. Full stop. It's loss. If you trade, it is a feature of one pricing formula, X times Y equals K, which is used by most DEXs today, most first generation DEXs. And the issue is these DEXs tend to be money losing because for LPs, because X times Y equals K, any time that the price moves from the point at which you initially put your money in, you'll have loss. And there's this idea of impermanent loss because if the price returns, then you didn't lose anything. But that's just kind of a weird concept, right? It's like if you invest in Apple at $100 a share and it drops to $50, you don't say, oh, that's impermanent loss because Apple could increase back to $100 and then I haven't lost anything. Like, it's just loss. Loss plus wishful thinking. So the reason it's called impermanent loss, in my opinion, is because the kind of first generation of DEXs are kind of, they're intentionally trying to confuse the returns to LPs because they're all negative. And so they do these things like say, oh, well, the loss isn't really loss, prices could return, so it's impermanent. It's hard to calculate, it's different for each person. None of that is true. It's actually quite easy to calculate. You can calculate it on the whole for the protocol very easily. You can report it alongside fees. You could call it loss. Generally, if people don't disclose things, it means the answer is bad, in my experience. So that's impermanent loss. The thing I'd say though is that that is not a function of DEXs. It's not a function of AMMs. It's just a function of X times Y equals K, which is one pricing formula. Any other pricing formula you use to quote trades in a DEX will not necessarily have impermanent loss. That doesn't mean it's not, it's like risk-free. There's other risks, but it won't have this idea of impermanent loss. That is a unique attribute of this X times Y equals K pricing formula.
Right, that makes sense. Transparency is indeed important, and like you said, if projects don't share that, there is something going wrong with it. And in that light, there's so many scams going on, and right now, as you all know, that we have a lot of volatility in the market, which brings us to our next question. And especially when there's so many scams, so many rug pulls happening, people lose a lot of their money, their faith into crypto, even not letting an average person get into crypto because of the fear of losing money. So how does the protocol remain healthy, especially in times of volatility?
Well, two things. So the first is the protocol takes into account Oracle prices and updates those multiple times per second from centralized exchanges. And so it then verifies those prices haven't departed too much from the slower but more secure Oracle prices on chain, like through Chainlink. And so that helps in times of volatility to keep very, very up to date with the real market price, which protects LPs and benefits traders. The second thing is in times of real weird stuff, for example, last weekend we had USD unpegging. We built in a circuit breaker so that trading just stops if things get too weird. And so, I think those are the two things that help in times of volatility, right? Staying up to date with the market faster than anyone else and having circuit breakers. So if things are really weird and some of your core assumptions are off, you just pull the plug and trading temporarily ceases to protect everyone.
Right. I mean, the DEX was thinking. Yeah, sure, Ben. Please continue.
I was just going to add a few things, and Mark speaks to the specifics, but at a more high level, kind of the faithfulness to the mission. And as you can hear, Mark's real renewed focus on design really kind of helps us smooth over the stormy seas, if you will. So, when Clipper was introduced in July of 2021, it went through not one, but two audits, including a bug bounty, the level of confidence on the design team, and then just the really sticking to the mission of free and fair markets for all. It means that the Clipper team, and it's really a community, but we're very transparent with where the returns come from. So for instance, we have blog and blog.clipper exchange. And one of our recent posts out there was where Clipper LP returns come from. And it explains in great detail the different types of architecture for pricing models. And we provide that for our community so they can learn, they can be informed, and they can help us spot things when they go wrong. I'd also love to share some of these links like that, where Clipper LP returns come from. Is it possible to drop links in a Twitter Spaces chat?
And yes, when I did check out Clipper and, when I went to your documentation and especially your blog, I was so in awe, especially with the amount of articles that you guys have published. And it's very informative.
But I appreciate your comments on the information nature. And look, it's not a gimmick when we sit up here and say free and fair markets for all. Mm-hmm. I could tell you that behind the scenes, we have detailed, long conversations from the top about what our mission is, what our values are, and open up any type of internal meetings with the mission and values. So for instance, with the Clipper community specifically, we have the values of knowledge, camaraderie, and playfulness. So with the value of knowledge, it's important, knowledge for knowledge's sake. We want the Clipper Discord community to be a place where people learn. And so putting out this articles and transparency about what the protocol does, it's there purely for the sake of knowledge for our community. And it helps keep things transparent, and it helps us have a knowledgeable community, which keeps us safe.
Yeah, sure thing. I mean, I feel like one of the most, especially about DeFi education, the thing is, everyone knows about it, but from the high level, and there's always DYOR. So for DYOR, which is do your own research, you should actually read and learn from things from the community, from the projects which you interact with, because that's where you find people who enjoy the things which you do, and that just makes the community more stronger, as well as more educated about DeFi. So let's move on to our next question, which is, in what ways does Clipper generate revenue?
It's really simple and aligned. When LPs earn money, right, when the value of their liquidity increases, the Clipper's DAO, which is Admiral DAO, takes a percentage of those gains. And and so right now the yields are very high. They can be 30% plus sometimes on BTC, ETH, and stables. And so the DAO takes 50% of the gains, but that could be higher or lower. And that's the revenue model. And the benefit of this is that it's very aligned with LPs. Everyone wins or not. There's no situation in which the DAO can win and LPs can't. And so if you can actually see all the revenues, if you go to Token Terminal and you type in Clipper and you go to the right where there's financial statements, and maybe Ben, could you post that link?
Or that would be great.
Yeah, I put it in our Telegram channel, and you're the boss of this space, so you get the links and all that.
Okay. Then you can just see the earnings. So, for example, in the last couple weeks,
right,
there's been about 25K in earnings. And the interesting thing about this, right, is that it is the highest earnings of any DEX. The reason being that most DEXs are paying out more in token emissions than they are bringing in protocol revenue. And I encourage people to go through Token Terminal and look at various DEXs and protocols and look at their earnings, because these are fundamentals, right? And this should tell you whether something is sustainable or just running at a loss fueled by tokens.
Right. This is something like which, Web2 folks do when they're trading for stocks. And this really helps, and like it's an eye opener for people, and who just use the product, but they don't really think about if and else will the project last or not.
Yeah, exactly.
Right.
Right. And it's a focus on fundamentals and the financial statement, which is created by a third party. So this is not like us fudging the numbers. This is someone else saying, this is what Clipper made over the last 30 days. And you can see we make revenue, or Clipper makes revenue, I should say, and other DEXs don't. And it's because it's the design of the DEX. And in bear markets, the focus shifts to quality projects. So, when the design is strong, you don't got to worry about the other stuff.
Yeah, I mean, if you have the base built properly, then the whole building is proper. Right. So let's move on to our next question. And since you've mentioned about Admiral DAO, right? This makes me wonder, how does governance work in Clipper?
So the goal is to decentralize governance over time. So Admiral DAO is an entity. It's Admiralty LLC. It's incorporated as a nonprofit member-managed LLC in the Republic of the Marshall Islands. And if you're doing a DAO, I suggest you look at the Marshall Islands for incorporating it. And the members of the DAO are currently the multi-sig holders, but we plan on decentralizing governance further. We can't talk about that too much, unfortunately, and we can't talk about things like tokens because we're a U.S. company, except to say that we want to decentralize governance.
Right. I mean, touch wood, we hope that you're going to make it in the future.
Right, and the advantage of being part of DAO, Admiral DAO, is that, it's not just Clipper. There are Admiral DAO partner projects such as Galley.exchange and NFT Exchange, and we hope Admiral DAO can find the best builders within the DeFi system and incorporate them into the DAO. So we have a community of the best people.
Right. That makes sense. And I hope like everyone's well aware about, now that you've mentioned one of your plans, which is to have a decentralized governance around Clipper. I hope that people make most of it with respect to participating in various events. And now that I've said events, what are the various ways in which anyone can participate in your community? Would you like to share some insights about the events which you hold, since I see Clipper Discord community very active?
Yeah, thanks so much. We're proud of the Clipper community. So it's 100,000 strong, active, engaged users, a very lively Discord where people chat, come in to learn about DeFi and to share their thoughts. But the Clipper community also goes out and does events. I would say the most popular ones that we've had so far in the past, just in terms of total participation, have been what's called Clipper Adventures. And they're sort of a cross between a Harry Potter Hogwarts house cups and a digital scavenger hunt. And we divide, up to 30,000 people that sign up into teams. We put them on ships because we're pirate themed. And we send them all through the Web3 space to learn and complete tasks, both on-chain and off-chain, and they earn points. And in fact, in our last adventure, we even created an in-house inventory, a character profile on the inventory screen, so that when people did their tasks, they would earn NFT badges, which would give them points. That was the score between the ships. And you could display those NFTs on our very own profile screen. And we're excited to iterate on that so that we can continue to add a friendly level of competition between all of our users, compete for knowledge, compete for tasks, all that kind of stuff. So adventures happen. The cadence has been around once every 6 months. We put an adventure. And again, I said 30,000 people sign up for that. But we also have ongoing campaigns in between adventures. So there's frequently a lot of external places use Clipper to do campaigns. So Galaxy, for instance, There was a Polygon ecosystem campaign as well as an Optimism ecosystem campaign. And you could go to the Optimism or Polygon Galaxy landing page, and it would give you on-chain tasks, which you could earn Galaxy Oats that were related to Clipper. And we also have evergreen quests within the Clipper Discord called Journeys. And the purpose of those journeys are to onboard, to educate, to entertain, and to activate our users. So generally, you would go into our Discord, you'd look for the category called Journey, and that would give you a chance to learn about the product, test your knowledge on the product, take some type of on-chain activity, and then after you provide proof, you will be granted an NFT badge. And of course, these NFT badges, they're used for prestige. They can give you specific roles within the community, and those roles can gate you access to parts of the Discord community. And as we iterate on the profile screen, it's also going to be a place where you can display your own treasure chest, which we love because people can display their prestige to other members in the community. And of course, it's an easy way to show activity and loyalty so that the most active, distinguished members of the community can rise to the top, which of course matters in decentralized governance. You want the people that are actually using the community to take the reins of where the community goes in the future. So the short answer to that is go to clipper.exchange, which is our website, and come use that link to come join our Discord. That's where the bulk of the information relay happens, is in our Discord.
And we have the clipper.exchange website. So yeah, that should hopefully help you navigate. Right.
And once you join the Discord, probably the first place to go is the beginner's journey. The beginner's journey, it lets you, it's a lot of stuff we've talked about here, but it takes you to a what is Clipper blog post. So you can kind of learn about the novel architecture, and invites you to follow our Twitter, join our Discord, but take a really cool quiz on 101.xyz, as well as explore and deposit liquidity into our core pools, so you get to use the product, and you earn a really cool beginner's journey NFT badge. So check out the beginner's journey, and hope to see you in our Discord soon.
Now that you've said it, I'm actually just checking it out, and I see there are 4 steps in which you can get to know Clipper and about how Clipper works.
So the last thing I'll say is we're constantly iterating on our processes. So right now it's a semi-manual or semi-automated process. People go to the Discord, it's like click through this link, go to this quiz, input this. And we're working to make it automated so that it's fast and a very seamless user experience. So, we're always on the community experience is high on our list of priorities. So we're always working on iterating and making it better. So just keep checking it out.
Sure thing. And I really like the fusion of Pirates X Harry Potter series of quests and digital scavenger game. It really excites me. I might try it next time. Yeah. Now that we know that Clipper has a very strong community of 100,000 people plus, and when we also check the Twitter following of Clipper, we see it's a perfect 111k followers, right? And so could you please shed some light on your go-to-market strategy, because that's a very huge number you have there on Discord and Twitter.
Yeah, I'll let Mark take that. And I know he has to drop, so maybe Mark, you can answer that question, and then I'll also say goodbye. He got meetings. He's an important person.
I got a family I have to attend to. They don't think I'm very important.
That's important.
I think the go-to-market is to build a community that coalesces around values, and the values are camaraderie, knowledge, and playfulness. And I think when you have that and you put out good content and you amplify it, people organically want to get involved. I also think that because Clipper has best prices, we get a ton of trade flow from DEX aggregators like 1inch. And so a lot of people follow or find us through that, and then they realize, hey, I'm trading through Clipper, and then they see the community, and then they join the community and they follow as well. And so I think that happens gradually over time, but creates a pretty stable and robust community. And I think that's a big part of how we've gotten the Twitter following we have.
Is there any last words, closing note from you, Ben or Mark?
No, I appreciate everyone tuning in, and I appreciate the questions. Thank you. I think crypto winter is a great time to look at why various things work, and that helps, and that's where I encourage everyone to do their own research. So thank you very much for joining.
Great. Thank you so much. Let me just let everyone know that, guys, check out our pin tweet. We have our mainnet waitlist registrations open. And if you want to check out Clipper's website, it's at clipper.exchange, right? So do check out their pin tweet at Clipper_DEX, which is Clipper_DEX, right? Thank you so much, Ben. Thank you so much, Mark, for tuning in. I'm very glad to have, spoken to you today. And guys, make sure to collect your OETs by filling up the form.
What a pleasure. Thanks so much.
Thank you.
Thanks.